Alright traders, George here with the Trading Authority, and it's time for another day trading essential. This time, win percentage. When we talk about win percentage, there are some consistencies that need to exist before we ever get there. So, for starters, we need to have a model. Whatever you choose to trade off of, we're talking about visually based, chart-driven trading, you need to have a model. Obviously, I'm using the Spitfire here. Whatever your model is, that is step one. Step two, you need to choose a market. We're going gold futures. You need to have a chart type and a period value for that chart. You also need to have a time of day that you would be trading. We're going to call that step one here for the foundation to this process. Once you have that down, then we can move on to the rules of engagement. This is when we pull together the actual rules from the chart that are all visually derived that really give us our permission slip of what we're allowed to do in the market. Okay, so think about that, what you're allowed to do. The opposite of what most traders think. Most traders think they can do whatever they want, when they want, not if you're rules driven, okay? So that's the next layer here. Once we get that, then we can go on to these neat metrics like win percentage and other things. Does your model and rule set have a positive or negative expectancy? How many trades does it generate over a period of time? What's the win percentage? And how about trade efficiency? None of these things can be known unless these foundations are in place. Alright, let's move on to the next step. Strategy 1. This is for the gold futures, 4 hours in the morning, 20 trading days through July. Alright, this particular strategy did $3,240 on 71 trades, 53.52% win ratio. So, what that looks like is this. Just like the prior Day Trading Essentials video where I talked about the flow of expectancy, guess what this column is right here? And obviously, a lot of chop through the first part of July here. You can see a lot of red still here until it starts to smooth out. And it's not until the end of the month where things start to really ramp up. It finishes up 2.44% growth curve there. And that's obviously pretty powerful if you can do over $3,200 on one contract in 20 days, right? Strategy 2 did minus $340 on 123 trades, but look at this win percentage here, 65.85% win percentage, almost a 66% win percentage. That did minus $2.76 per trade over 20 days. That's $17 a day in the whole. And that looks like this. This one, so close to being break even, had a lot of back and forth here to a neutral point. I don't know if you can see these zeros, but at the end of the 20 days, 123 trades and just a bit in the red there, 0.24%. Strategy 3. This one did 2,930, 49 trades, but check out this win percentage, 32.65%. If you've been in the live room, you know automatically what's driving this and what's driving that. There's only one thing that can do that, right? How about this? Almost $60 per trade over 20 days, $146.50 per day. So, the misconception about win percentage is that you need to have a high percentage of wins to have a strategy that's worth something. And of course, right out of the gate, everybody's either going, I want strategy 1 or I want strategy 3. And strategy 2 has the highest win percentage. So, win percentage is an interesting sidecar to the entire process here. It's not even a first or second tier metric that we want to consider. If we had a choice, we'd obviously say we want 100% win ratio, but what we really care about is the expectancy and the number of trades. So here, not only are you hit with a high number of trades, but a negative expectancy. Alright, so forget about the win percentage. That's out the window. It doesn't matter. Here, we've got a win percentage down to less than 33% with fewer trades than we had on this guy here that was at a 53% win ratio. And everybody wants to move over here, right? There's no question about it. That's where you want to live. So, win percentage is something that is a sidecar to the entire process, as I showed you here, when you start to identify these kinds of foundations. All of these things here become consistent, and then what's in the yellow here, you fill out as you do your investigative work, as you do your sim trading, as you do your live trading. That all becomes a part of the yellow numbers there. You won't know until you start doing the work. So a lot of traders want to have great results, but they don't want to do work. As you do the work, When you start getting into this, of course it's connected to what I showed the last time, but this flow of expectancy here, what do you think is going to happen if you hit these kind of losers and all of a sudden you don't have belief in what you're doing, or you're trading with a small account? Boom, you walk out of it and you walk away from that growth curve. It happens all the time. So real important to understand that win percentage is just a sidecar to the entire process. Your rule set, your model, all those other foundations that I showed you here in green and blue, that's what drives this. So think more about this and let this work itself out. And when you get to understand these numbers here, the expectancy and the number of trades will trump the win percentage every time. All right, that'll do it for now. We'll see you back in the live room.